Hello, good morning, everybody. How are you guys doing? Okay, we have many of you here on the line right now. Our live will begin shortly at 10:30. So now we start the room early, so all you can come in first. So if you are doing okay, yeah, you type maybe you type reply with a good morning. Today my favorite Olympic games start already. Okay, so after this I'm gonna go watch Olympic games. Yeah, thank you, Cecilia. Good morning. Yeah, good morning, Hansu. Okay, let me share this Facebook Live. Just give me a minute. Okay, so we'll begin live later at 10:30. So we're going to talk about reversal pattern with market psychology, how to trade reversal pattern with market psychology. We have got a very experienced speaker from Singapore who joined us today. So his name is Kong Hao. So later I get to interview him on how we can trade reversal pattern with market psychology. Okay, so we begin in another minute. Yeah, good morning, everybody. Saturday morning, so you all are still semangat, okay, to join us. Yeah, hope all of you have a great start of the weekend. Now, if you may, if you're ready, can you please help us to share this Facebook Live? For those of you who are tuning in from Facebook, you could help us to share this Facebook Live. That would be very great because we can reach out to more people who want to learn about how to trade the market. Okay, if you may help us to share this Facebook Live, I'll really appreciate it. Of course, if you like this Facebook Live, also can help us to smash the like button. Okay. All right, thank you so much for all your shares. Yeah, of course, but keep it coming. Can share it to those relevant trading group so that more of us here can learn about the US market as well. So today we will focus more on the US market. We also look at the trading patterns. We also look at the market psychology. Okay, so I think it's time for us to begin the live broadcast. So a very warm welcome everybody to this Facebook Live and also YouTube live sharing brought to you by Kenanga Futures. So today we are very excited because we have got a very interesting topic we want to share. But before that, let me invite the speaker on the line today. Okay, good morning, Kong Hao. How are you?
Thank you, Sean. Yeah, thank you, everyone. Yeah, I'm good. How are you, Sean?
Okay, I'm doing great. Thank you so much. Yeah, actually, I think you're the first Singaporean speaker that I get to interview in this year. Okay.
Wow.
So
Okay.
very excited. Okay. So
Me too. Me too. Yeah.
let me bring up my screen. Just give me a minute. Okay, we have almost 100 people here on the line right now. Hang on, yeah. Okay. So today, this trading in reversal pattern with market psychology is brought to you by Ganaga Futures. So we are doing this live cast simultaneously on Facebook and also YouTube. So as you know, market psychology measures between the rational and the irrational investors or traders' behavior. So the rational are those who are confident, whereas irrational are those who are greedy and fearful. I'm sure that we all have felt these emotions before, like we feel greedy, we feel fearful, and sometimes we feel regret, right? I think I also have stocks that I put a lower entry price, but it never hit one. So sometimes we feel regret. I should have set this set higher price, right? And sometimes we set the target price too high and never hit, right? Because we are greedy, we keep revising our target price higher and higher, and then that maybe distorted our trading plan. We may have a plan, but sometimes we get our emotions to distort our trading plan, and then that koya already lah. Okay, so today we are going to learn how to trade the market reversal pattern with market psychology. Today we are going to delve deeper into understanding market psychology. Our speaker today is expert in behavioral finance, because if we can identify all this behavior, then it offers us trading opportunities. The opportunity for us to make money, whether in a bull market or in a bear market, by understanding what is the state of the market psychology right now. So today, without further ado, let's delve into the topic. Okay, so of course, for those of you who want to open a Kenanga futures account, later I will put in the account opening link. You can also go and register a futures trading account with Kenanga. Of course, I think Kenanga Futures is launching a very exciting campaign coming up shortly. So if you register as a client with Kenanga Futures, then you will stand a chance to win some amazing prizes. Okay, so we will let you know more about our Kenanga Futures campaign when it's ready. Okay, now allow me to briefly introduce our speaker today. We are very honored and excited to have him on our show this morning. Okay, now he's none other than Mr. Wong Kon. Now, Kong Hao has more than 20 over years of trading experience in the finance industry. Now, he is an investment and trading strategist, managing his own fund, and he founded a Weipedia Pte Ltd. Okay, and he's also a regular trainer with SGX Academy. Now, he specializes in the behavioral science or the market psychology, and he is also an expert in risk management. Now, he often receives invitations to share on market and trading insights with the industry practitioners, fund managers, proprietary traders, dealers, and retail investors. He also conducts training sessions for trading representatives as part of their continuous education program in Hong Kong, Malaysia, Singapore, and Thailand. He studied engineering but was passionate about investment and trading. So this led him to pursue after the financial market after his graduation. So he started off as an apprentice in CMAX and a floor runner in 1995. Since then, he had been a floor trader, financial dealer, and an active practitioner in the securities and derivatives market. Now, some of the organizations that he has participated with are the Singapore Exchange, Bursa Malaysia, Chicago Board of CBOE, Hong Kong Securities and Investment Institute, Hong Kong's regulator, Securities Futures Commission, and Hong Kong Monetary Authority, International Organization of Securities Commissions, Hong Kong's Treasury Market Association, banks, university, mainstream media, and other non-profit organizations. So as you can see, he is definitely an international speaker. Okay, so without further ado, let me invite Kong Hao. All right, so Kong Hao, are you ready? Hang on, yeah. Let me.
Yeah, okay.
Hello, Kong Hao. I don't know why just
Hi.
now you were off the live stream just now.
Yeah, I do not know. I think my laptop on the first floor is like doing a refresh, Microsoft refresh.
Okay.
I think we're going to present a very good message tonight. I'm not too sure. I'm hearing some echo. Are you hearing echo on your side?
No.
No, okay, that's great. Yeah, I'm just going to
Okay.
move ahead and
Okay.
do the presentation right now.
All right. So I've introduced your background to our
Okay, so what
today.
happened here was Microsoft is doing some update, but I'm back here to my study room. I will just go ahead to do my presentation right now. Just give me a moment.
No problem. Okay, for those of you who are early today, okay, please help us to share this live stream if you're tuning in from Facebook so that you can reach out to more of your friends who may be interested to learn how to trade the reversal pattern with market psychology. Okay, we will also go into a bit into a US market later. Okay, so we're going to understand how is in US market different from the Asian market. Okay, Kong Hao, we can see your screen already.
Okay, I just gonna get moving with the presentation. So once again, thank you, Sean, for the wonderful introduction, and so Kenanga Futures for inviting me and also representing CME to speak on this topic about trading in the reversal pattern with market psychology in the US market. Okay, I think thank you for the wonderful introduction. I will not just go again, just to respect your time. I just want to move straight to the disclaimer because later on we're going to have quite a bit of, we're going to study into the market itself. So we're going to study into S&P, Dow Jones, and Russell, and as well as NASDAQ. Yeah. So now all these representations are based on my personal conviction. It is not a recommendation. All these are my personal conviction and for my own consumption. But I really hope that to bring some educational value here so that in the future you will have a more sustainable trading career. I want the traders to have a longevity mindset. It means that you keep on trying. But you keep on trying, that you gain the experience that you will be successful somehow, but we go slow. So that's my whole intent, and I'm very thankful for CME and as well as Kananga Futures, and for the first time together with Wealthfront, to organize this event. Okay, so I just want to give you a framework what I will be covering today, and very coincidentally that when I've prepared this, so Sean also a list of questions. Now he wanted to do something more interesting here, whereby he said that he wanted to do he wanted to ask me a series of questions.
Yeah.
Sorry, having some echo here.
So I prepare a series of questions in advance to ask Kong Hao.
So he want to ask me a serious question, then I will reply accordingly. But when I read his question, I realize that it is so in line to my presentation. Okay, so now this is what we're going to do here, is that he's going to ask me a question, and then I'm going to go chapter by chapter. So yeah, so this is what we're going to do. I think I hope they won't pick up some echo, and let me just bring back my headphone.
Okay, it looks like no echo on my side.
Yeah, because I suspect they may pick up some echo here. Yeah. Okay, so I'm going to bring you the first step is that the state of market psychology trading. I'm going to bring on a character. Her name is called Catherine. It represents the mass market. It may represent you, but my whole idea is not about you. My whole idea is that so that you are not part of the mass market for the more savvy trader to take advantage of you. I want you to shift your paradigm from the mass market psychology to the more savvy trader side, to recognize all these Catherine. I can tell you that the community of Catherine are about 70 to 90%. These are the best market. Then after that, we're going to study about greed. Maybe I can ask you a question first right now. Of course, the market, there's greed and fear. But I want you to start to formulate between greed and fear, which one likely to come first? Is it greed come first, followed by fear, likely? Or fear develop first, then followed by greed? That will set you thinking. But whatever the case, between greed and fear, it will bring forth market opportunity. And this is what we're going to do here this morning. I'm going to give you some example. Then after that, I hope that your eyes will be open. Then more importantly, coming Monday or next week, or moving down the road, you can apply what you have learned today in your trading career. Okay, so after that, on the part 4, we're going to use whatever you know about market psychology to recognize changes in the market direction. Then, of course, it will not be done without a practical example. Then we're going to open up the time. Yes, during this period will be my Q&A with Sean. Then after that, it will be a Q&A between myself and yourself. Okay. I also want to take this opportunity to thank CME who brought me into this space, and just spare me about 5 minutes. I'm going to introduce what they have done over the last many years, and especially the last 2 years. Sure. Now, you can see that in 2020, they have developed this, as all the indices get higher and higher, as all the stock get higher and higher, it means that it's more expensive to own. It means that it's more expensive to trade. It means that when you trade, there's always a quantum. It's getting more and more expensive. As the price escalates, the contract value is getting more and more expensive. But I'm so thankful that in 2020, they launched this micro E-mini futures, then followed by option. and it make it so affordable for all the retailers, including myself, and of course yourself as well. Okay, so I'm just gonna give you a demonstration what they have. All this micro, mini S&P, Nasdaq, Dow Jones, and Russell. Now you can see that launched about 2 years ago, and I want to point to you in March 2020. That's where US start to have a very rampant COVID-19 cases, and that sent Donald Trump very panic. Now, in March, market was very uncertain. That was last year, and you still remember the US market collapse. Now, when you bring the attention to you here is that when the market move south or getting very volatile, the activities, now these are all the volume and activities, it pick up tremendously. I want to look at March, that was 2020. You could see that the most of the interests are in S&P, Nasdaq, and followed by Dow Jones and Russell. Now, so because of a very successful micro E-mini futures, last year, August 2020, they have launched CME, or who you may say, who is CME? CME is Chicago Mercantile Exchange. Now, they also launched the option in S&P and Nasdaq as well. So for those who enjoy trading options, go and look for that. Yeah, so I like option as well. So, but today I'm not going to talk about option. Today I'm going to talk about market psychology. Okay, the last two slides I have here for CME here is that I'm kind of proud being an Asian trader, and I think you should join me as well. Now, since the launch of, this represents all the micro E-mini index futures, the market share of Asia trading the US indices. When it was launched at time, it was about 5%, but today, and I think it's still growing, it's about more than 10% that we Asian trader capture the market share. It's kind of exciting to me. Okay, this is also very interesting statistic that I gather here from CME is that now on the left, it represents the overall pie chart of each individual indices. Now you could see that between Nasdaq and S&P is kind of balanced. Yeah, then Russell and Dow Jones about 6 and 7%. That's the pie of the overall market participant trading in the micro E-mini index, US index futures. But how about the Asian trader? And that really excites me here is that the Asian trader, they are very interested with the technology index. Now you can see that just Asian traders alone, we contributed about 62% of the entire micro E-mini index futures. Yeah, US index futures. And S&P 23%, then followed by 7% and 7% for Dow Jones and Russell. Okay, I think we'll start. And like what I say, for those that just join us, so what happened here is that this webinar started with this. I already made plan. I already start designing the topic. I'm excited. Then after that, Sean gave me a list of questions, about 6 questions. Then he wanted to have this format, say, okay, Kon Hao, I'm going to ask you one question, then you give us the answer. But when I look at a question, it is in line with the flow of presentation tonight. So, Sean, are you ready to give me the first question?
Sure. Kong Hao, are you still hearing the echo?
Yes, I'm hearing some echo.
Actually, is it because you actually also tune in to this live on the other device or your browser? If you can off that.
It could be.
Yeah, maybe because you open another tab tuning into this live, so you hear the echo. Did you?
Okay.
Okay. All right. So you can go back to your slide. Okay. So Kong Hao, the first question I want to ask you is, could you tell us briefly about the market psychology and why is it important for us to understand the state of the market psychology in trading?
Okay, so Son, you just asked me about why is it important to understand the state of market psychology in trading. I just want to do a sound check. Is everything good?
Yeah, everything good.
Way better right now, right? Okay, now I just want to
your slide.
Can you see my slide?
No, your slide. You turn off your slide already.
Okay, let me just share again. Give me a moment. Okay.
Okay, yeah.
Okay, so you're asking me about tell the audience importance of to understand the state of market psychology in trading. Now, can you see my slides? I just launched it. Yeah,
Yes.
fantastic. Now, for those that just join us, I would say that, okay, let me use this character. Her name is called Catherine. Now, she represents, no offense, but if your name is called Catherine, definitely it's not referring to you. But she represents the mass market psychology, I would say up to about 90%, 70 to 90%. Now, as I give you this demonstration, it may speak to you because you may felt that you behave in this manner. So we are part of the market psychology, but or part of the mass market psychology. But my intent is not to shame you or anything like that. But my intent is to really to help you to recognize that we could be part of the mass market psychology, but I want you to bring you away from it to stand on the other side, so that when we look at a mass market psychology, we can recognize them. So once we can recognize them, we will also recognize the opportunity as well. So in short, I do not want you to be part of the mass market psychology, the herd mentality, but I want to bring you out from the herd mentality to the other side. So when you look at the picture, you're clear. But the good news is that we were part of them before, or you will be part of them, because after this presentation, so coming Monday or futures, when you look at the market, you'll bring you so much clarity to how to understand the mass market psychology. Okay, now Catherine. Now, how you identify Catherine is this. Now, if you yourself or your neighbors or your colleagues have this, when you talk about investment or in life, they always have this statement. Say, oh, Sean, I should have buy the stocks. Oh, Sean, I should not have cut loss. After I cut loss, the market go up. I should not have done that. I should not have buy too many. I should not have listened to my broker. So now, if these traders and investors always have this word about should have, then I think likely she will fall under the category of Catherine or the mass market. Now, this is how it works here. Now, when we look at Catherine, how we recognize them, and I can tell that it will speak to many of us here today, because we used to behave like that, or maybe are still having this idea how to invest. Now, usually Catherine will behave like that. The price dropped a lot already. My friends say that it's a good time to buy now. Now, she has no opinion of her own, or don't have a firm opinion of her own. Now, as a trader investor, you have to develop a firm opinion, firm judgment. So always what my friends say, what my broker say, then I will buy now. Then after that, the market dropped, and she said, oops, it is okay. I'll buy some more to average it. So she did. See, I'm right. And when the market started to make a U-turn down, she finally feel a bit stressed because she's averaging it. So after it broke the low, the all-time low, Catherine got so frightened, and she said, help, cut me out, sell, sell, sell. So she sold all her entire position. The moment she sold her position, the market started to trade sideways, and then she tell herself, yeah, I should not have cut loss. She signed and she talked to herself, talked to a broker, please don't tell me I cut at the low again. Then she'll call the broker, say, hey, maybe Sean or Nicholas, do you think that the market is seeing my stop loss? They know my stop loss. But I can tell you that no, it is not. Okay, between Singapore and Malaysia and in Asia, our regulations are very strict. So if the institution can see your stop loss, I believe, and that is to me, it's a chargeable offense. Okay, you're not supposed to see all this stop loss order, all this and that, and let the player know. So it's not right to do that. So when the market trade down a little bit, Catherine say, see, I told you market is coming down. But no, the market is not coming down. It's still going up. Then after that, Catherine say, I don't believe this. Never mind, I'll wait for it to come down. I will buy back again. So she got really angry this time round. Remember, she cut at the low. Now she got really angry and furious. So after the market don't really wait for her at all, the market continued to pump up. And this time round, she thought to herself, I think I am right all this while. To buy, I'm right. I better buy now. If not, I'm going to miss it. So she got this FOMO. FOMO means that fear of missing out. I think I'm right all this while. Why I cut loss? I should not have cut loss. And now market is going up. I better buy now. And this time around, she really go out with vengeance. She bought a lot. Okay. And the moment she bought, the market started to dip. And then this time around, she said that, yeah, stop loss never work. I think I better do a stop loss. then that means she's still holding her position. Then after that, she'll look at it. This stock is a good stock. I'm a value investor. Now, I can tell you that most of the value investors that I know do not make money. So now, value investing is that you have to define it before your entry, not after your entry. But most of the investors and traders I know define value stocks. Of course, I'm talking about index here, but they only define value stock after the market, the entry price sink about 20 or 30%. Then they look at the stock they're buying. It's a good stock. I think I'll hold it. But the moment they hold it, the macro environment is not so conducive. It continues to sink. Then she say that I cannot believe this. So now, again, for those that just join us, I just want to tell that these are the 70 to 90% of the mass market psychology. And that's how I behave. And that's how I believe that most of us think. But my whole idea is not to shame you, but my whole idea is to let you to see in greater clarity, so out from this mass market, and you will be the savvy investor and traders, I hope, okay, with some practices. When you look at the market, you can recognize the Catherines. So that's my whole intent. So with that, I think, Sean, are you ready for the second question?
Yeah, definitely. So we know that greed is a very important behavior among all the investors, and that also drive our decisions in the market. So can you tell us more about how does greed affect our behavior and move the market?
Yeah, definitely. Earlier, I think at the start, I asked you, I challenged you a question that between greed and fear, which one likely will come first? Do you think that usually the market will or the mass market will develop greed first, followed by fear, or the mass market will develop the fear first, followed by greed? Which one have a heavier weighting? Now, I can give you the answer right now.
You can type in the comment. Maybe we'll let the attendees to type in the comment.
Okay, maybe you see, you read the comment and you let me know. I think we keep it very interactive. Yeah.
You think greed comes first, or you think fear comes first? Okay, you can type in the YouTube live chat or type in the Facebook live chat.
I'll just wait upon you. Yeah, just wait upon.
Okay.
So it's important to recognize so that when we look at the market, we have so much clarity. Once we can spot it, we can spot opportunities. So which one likely will come first? Do you think greed or fear? But each one will develop to the subsequent later. If greed comes first, it will follow by fear. Or fear comes first, it will follow by greed. So which one comes first?
Okay.
So what's the verdict?
From the responses I receive right now, I think 80% go with greed first.
Fantastic. Wow. So right. Okay. So you have to recognize that greed comes first because it is the human nature that when your broker, Kanagan Futures, give you a view, an analytical view, and they say, maybe Nicholas will say, buy maybe 2 micro. Say, 2 micro. What can we make so little? I want to buy more. So it's always the greed. It's a human nature. But can I say this? Be a responsible trader to yourself. Take it easy. Go slow. See the result first. It doesn't matter about the makings. But to me, it matters is your performance. Clock more profit first, small profit. So once you have more small profit, because you eliminate when you have trade in a so sizable small quantity, basically your emotion are not too affected. So you're more disciplined. You look at structure, all this and that, and you're able to carry out. Then study through your performance first. Then after that, you decide. So once you establish a firm identity about you being a trader or investor, then you start to trade a little bit more seriously, more sizable. Okay. So I'm just going to give you a demonstration here. Back to Catherine. Remember Catherine, the slides here? Now, where are the greed? Yeah, where are the greed? Now, you still remember the story? She cut loss at the low. And then after that, she blamed the broker or she blamed the market. The market must have saw her stop loss, but honestly, the market did not see her stop loss. This is exactly how it is. Okay, so after that, she got so agitated. She got this FOMO, fear of missing out. So she bought around the high. So this is greed, right? Yeah, taking vengeance, greedy. She fear of missing out. But as the market, these are also greed, form of greed. But there's more greed here. But you have to understand when Catherine developed this greed and purchase beyond her capacity of able to take the market swing. So once she have done that, she actually entrapped herself to, as when the market start to come down, it's very difficult for her to manage herself. So I think, Sean, you have another question, which I think I
Yes.
already give you the answer.
Yeah, because since we talk about greed, right? So why don't we talk about fear?
Yes. Okay. So in fact, I think I already explained to you how does, I think, okay, the next question Sean is going to ask me is, how does fear affect investor behavior and move the market? It is because of the greed developed first. Okay. So I think we have a common understanding, because you through the chat box, you told Sean and told myself that 80% of us believe that the greed developed first. And it is because of the greed in the best market when they are trapped. Especially, of course, when we buy, we want to buy a lot, so that when we are right, we can make much, right? But that became a problem. So even you have confidence, you buy very measured within your capacity. How much is much? It really depends on your background, okay? But don't buy too much, depending on your background. Just have fun. Treat it as a very it's a very real game. Okay, treat it as a real game, and enjoy the game. Enjoy the lifespan career as a trader. Enjoy this game. Now, but most of the best market will develop the greed. Then when it goes opposite the direction of what they expect, then because in the first place they extended themselves. So when the market go opposite, then fear start to develop. They start to calculate what's my paper loss right now. So when they became fearful, they became irrational. Now, so this is another example here. So again, we know about Catherine. Then we look at this, what happened here. She very panicked. Now, so when the fear developed, this group of Catherine, the mass market is that they will cut at the unrealistic price. So the broker say, you want to cut now? Or the broker may force sell the position. Or the other way is that Catherine will force sell herself. I just cut whatever price, So it depressed the market significantly. So let me just give you another idea here between greed and fear. When there's greed, it brought forth, or it bring forth overvalue situation. But when there's fear like this, it will bring forth under situation. And this is where the opportunity arises. In case you missed my statement, I'm going to repeat here, is that when there is greed, I'm talking about significant greed here, it will bring forth overvalue situation. It works for the indices as well and the stocks. But when there's fear, significant fear, it also bring forth undervalue situation. And both will have opportunity, which I'm going to share with you very structurally how it works. But I wanted to give you an understanding about this character cat, where it also represents the mass market. Now, so there's fear. You can see the market dip down. And before that, there's some greed there. Okay, just buy. So, but buy with ignorance, and that's bad. Okay, then as the market moves against her, there's fear develop. Now, so this is a big greed. Big greed was subsequent followed by huge fear. At this point, of course, the demonstrations have not cut loss yet, but I believe down the road she may cut loss. So now you can see here, right? So I just explained to you between the greed and fear. So greed bring forth overvalue, and fear bring forth undervalued situation. But I'm going to share with you in a very short while how to recognize them and where is the opportunity. Okay. So now the thing is, again, is that I hope after this 1 hour short sharing, you will not be Catherine. If you are Catherine, you will be looking at the market on a plain view, like a helicopter, right? Plain view, looking at all these Catherine. It became so clear to you. So, Sean, I'm ready for your next question.
Yeah, okay. Thank you so much for explaining greed and also fear. Since our topic today is trading in market reversal, so how do we recognize a change in the market direction? So when do we know that the reversal happens?
Okay, so there's a question that how can we change in market direction? Now, so I'm going to get practical right now. So earlier, I just finished my introduction about letting you understand this kind of more like an animation of Catherine, but you will have, I hope you will also have a self-reflection about, yeah, it's me, yeah, but don't be shameful about it. It's okay. In life, we go through how we feel Failing is okay, but make sure you don't die from it. Okay, fail, we make sure we learn from it. So today I just want to give you this understanding, have a better clarity as we reflect upon our trading journey or investment journey. It really makes sense. But moving forward, I want you to think very differently. Okay, how to recognize Catherine? Okay, now you're not Catherine. Now you are looking at the mass market. You're looking at the 70 to 90% of the mass market. You're looking at all the Catherine. How to recognize the change and where is the opportunity is this. Okay, now, can you see that you have to recognize for fear? You have to smell fear. You have to smell fear. How you know fear? You will tell. You're able to tell that there are news, usually macro news that shake the market. And I love this kind of market volatility, because whenever there's volatility, it brings forth opportunity. Because when there's volatility, I know for sure that will behave very fearfully. Yeah, which is good. Now, I'm not trying to laugh at them, but really I want to bring this Catherine out from the dungeons and be who they are supposed to be. Yeah, so that's my whole point. Now, so when I'm trying to clarify here that I'm not being sinister, that I'm trying to read to Catherine all this and that, take advantage of them. No, if I'm going to take advantage of them, then in the first place, I will not share about all these. But I want you to bring you out from being a Catherine. Now, whenever I see fear, you understand, then now during this part, you can see that the market swing down. It also suddenly swing up. Now, earlier, remember what I say here is that especially when there is market news event that shake the market, it will kind of sieve out Catherine. It will bring her emotion out. So we could see fear. Now, remember, it's still the bad news, still there, right? Now, then you have recognized that suddenly the market swing up. Suddenly the market swing up. The bad news is still there. Suddenly the market swing up. Now, you can recognize that there's fear, and you also have no understanding why the market suddenly swing up. Having said that, the bad news still there, but suddenly the market swing up. It is because the market practitioner or the savvy trader or investor recognize that is overly done, is oversold. Okay. Now, what can you see here? This was Catherine. Okay, a black bar or red bar, whatever color you denote it. Then followed by a strong bar, a green bar or blue bar, whatever color, or hollow bar. Okay, doesn't matter. So what do you call this? The whole structure. This whole structure is called bullish engulfing body. So when I look at a chart, what is market psychology? How I measure them is that it's data, but when data you convert to pictorial format, is chart. So I really want to encourage you, when you look at a chart, don't be too mechanical. That means, oh, it's a bullish engulfing body, therefore it's a buying opportunity. This very superficial level. But let's go deeper. When you say bullish engulfing body, try to understand the market psychology behind the bullish engulfing body. So once you can recognize what's the story, the fear and greed behind it, then this bullish engulfing body become very precious. Became a bullish engulfing body with high weighting. Okay, so now it became very clear to you, isn't it? Now, how about this structurally? Now, earlier we talked about Catherine having this FOMO, and she cut loss at the low, and she's very grouchy about it. Then finally the market started to pump out. She said, I think I'm right all this while. And she's getting very FOMO, fear of missing out. She bought a lot. She wanted to take a revenge. Now this, right? Now, what you could see here is that a bullish body, a candlestick, then followed by, and earlier I said that when the market get very greedy, it will lead to what? It will lead to overvalue situation. Now, when overvalue situation, I think the savvy trader investor could recognize that, then they'll start to come in. Now, these must be some good news out there. so it trigger all this Catherine and go and chase after the market. So please don't chase after the market. And because we recognize that this overvalue situation, we will come. Okay. Once you get a bit too overvalue, we will come. And we're not trying to depress the market, but when you recognize that, that's that's called bearish engulfing body. I think now it makes a lot of sense to you. Now, how to recognize this in greater clarity is always look for the fear, which is here. I'm not too sure you can see my cursor. the fear, which is the first
Yes.
rate, and
Can
then you look out the green, the second green here. Yeah. So these are greed, right? So between fear and greed, can you see the picture here? So not too worried about after this session you try on your own chart and say, no, I just can't see it. Give yourself time. But I just give you a framework that this is how it works, and it's not too difficult, right? So I just give you a framework, but give yourself some time to explore, maybe with Nicholas or even with Sean. Yeah, sorry, Sean. Is it Shane or Sean? This is the first time I know. Shane, right?
Shane.
Yeah. Because in
No
Singapore,
problem.
it's spelled that way. Some of them is called Sean. So yeah, Shane. Okay. Now, so this is how we recognize that. So give yourself some time, talk to Shane, talk to Nicholas, or even you can email me if you see something interesting. Just screen capture the page and email me. I'll be happy to explore with you. Okay. So next question.
Yes.
Shane, yeah.
Yeah. Right, before we go to the next question, right, if you have liked the content so far, could you help us to smash the like button and also share this video out on YouTube, also on Facebook, so that more of your friends and family can benefit from this YouTube and also Facebook live stream. All right, so thank you so much, Kong Hao, for addressing the question. So the next question is, how do we spot reversal signals in the US indices? I think when I talked to you last time, you said you want to focus more on US indices, right?
Okay, because I'm excited, not just because CME sponsored this program, but it's true enough that later I explain to you that the Americans traders are more emotional. So Sean can ask me a question if you want to later, okay? Americans
Okay.
traders are more emotional. So when they are more emotional, it is more volatile. When it's more volatile, it brings forth more opportunity. Okay, now how to spot for reversal in the US indices is what I've explained earlier. Earlier I explained to you the story, then I give you the structure. Now I'm going to give you the examples, okay, between NASDAQ, S&P, and Dow Jones. Now let's look for bullish engulfing body. And do we have prepared bearish engulfing body? No, just bullish engulfing body. Okay, now, but before that, let me just give you some understanding how to trade the micro E-mini, S&P, Dow Jones, NASDAQ, and Russell. Okay. Now, so basically, you have to understand that now futures, I like futures the most when it comes to trading. But when I invest in asset class, which is the stocks and all the assets where I can calculate the intrinsic value. When I trade, I would like to trade the derivatives, especially those exchange products. So what happened here, the relationship between Kanaga futures and CME is that the exchange guarantee all the trade. And the broker, of course, Kanaga futures, they are the one that execute the trade through their platform. Okay, so all the trade will route to CME itself. CME is an exchange. Now, how to understand futures is this. First, you have to understand what is the minimum point movement. In S&P contract, it states that the minimum point movement is 0.25, but I think 0.25 will be a bit confusion here. Make it easier for you. If you shift to 1 point, is equal to $5 because 25 cents is worth 125, $1.25. But if I got to shift out the decimal, how about 1 full point? That means you have to understand that 1 full point in micro E-mini S&P is worth $5. Now, there's always a value tied to whatever you trade, whether you want to buy now or you want to do a sell short. Say the price right now is 4,003. So what does it mean? So what do I mean when I engage myself with one micro E-mini S&P? It means that's at 4,003, whether you buy or long or sell short. Since 1 point is $5, if you buy at 4,003, you just take 4,003 times 5 is worth $21,500. Now, to me, these are intrinsic itself. Is that, of course, you don't have to pay $21,500. That's the beauty about futures. There's always, you come in for margin. Now, these represents that you're literally buying a basket of 500 US stocks worth $21,500. That is the real worth. Okay. So, again, you don't have to come in 21,500. There's a margin. I'm not too sure how Kanaga futures price their margin, but usually it's just a fraction of 21,500. But if you say want to pay full, it doesn't matter. So you just have to understand that your total exposure is 21,500 US. That's all you need to know. You have to feel very comfortable and at ease about this of you're buying a 500 stocks worth 21,500. You have to feel at ease. Now, so the rest, you can screen capture, or you can always ask Kanaga Futures for the slides if you want to, or can email me later if you want the slides. Just I'll give my email address later as well. So just one last example, Russell measured the small cap company of listed stocks. So basically 1.5 US, if you buy or sell short at Russell at 2003, represents 2003 times 5 is 11,500. Now, so as of now, this price, I think Dow Jones yesterday for the first time break 35,000. Now, I want you to focus on these values. 21,000, 30,000, 11,500, 17,250. If you find that 21,500 is too much exposure, then you go for Russell, because all of these have a similar behavior. So if you find the contract size is too huge, then you look at the 2,000 or NASDAQ or Dow Jones. Okay. Now, the exercise here is that you try to spot for the bullish engulfing body. Now, unfortunately, I've marked this so you could see that there's bullish engulfing body. Now, let me just give you some context here. Starting this year, if you're aware, or I know you're aware that the Federal has been very inconsistent with their statement. Sometimes they say that it's inflationary, but moment they say that it's inflationary, going to hike interest rate, the US stock market dive down, right? Yeah, then after that, they have to come in with this, say that, oh, because of the COVID-19 the economy is transitionary, that will kind of cushion the market. But whatever the case is, I will look at the fear of the market at that point in time. That was what happened in March. And I was examining the 60 minutes chart. I could see very clearly, definitely there's a lot of fear. Yeah, because it dipped down a lot, then followed by a bullish engulfing body. And that was a point. Now, the next slide, I just want to encourage you here is that not because I prepare a seminar, I backtrack all these, but indeed on the 6th of March, I have this case study group member, that every week I will give them case study. That was a pre-market event. That means before the market started to move. I try to challenge myself that so that it will be inspiration to the members and even you right now listening in, that it can be done. You just understand that don't look at technical analysis as mechanically. It is alive. It's a study of human behavior. That's something that I have to know, right? Now, on the 6th of March, I posted to this chat group. I say that, US market is still moving south. I analyzed that the main trend is still up. Therefore, I view that the market as a retracement. Retracement means that when it come down, look for opportunity to buy on dips with a measured risk or calculated risk. The case study demonstrated the biting point on buy on dips. So basically, we could see here is a bullish engulfing body. So that's what we planned for. And subsequently, about 1.5 months later, it kind of went up really a lot. And today, for the first time, overnight, it broke 35,000. Now, so if you engage yourself about 31,000 and 1.5 months later, it's about 34,800. So what does it mean? Is that earlier we explored that 1 point worth 50 cents US dollars for Dow Jones, micro E-mini Dow Jones. So if you cash out at 34,800, you get in at 31,000. So basically take this minus this times 50 cents. So your net or gross income, I would say is net, because I think commission for futures is really negligible, is 1,900 US dollars. Okay, it's almost like net profit. Now, next example, I'm just going to go through a bullish engulfing body on example with micro E-mini Dow Jones, micro E-mini S&P, and micro E-mini NASDAQ. Now, next one, if you realize just now I mentioned to my group here, is that the US market is still on a growth stage. So basically a growth stage strategy, I try to stay very focused even as a trader. If the market is trending up, I would do my best to buy on dips. So every time the market, there's some shock wave, I'll look for opportunity to buy. Then try to buy and sell. Then after that, I will go bonkers. So it doesn't matter if you can buy and sell both sides, is fine. But to me, I try to make it simple. I try not to get my life too busy. It's really up to individual. If it works for you to do both side, having both side position all the time, if it works for you, go ahead. Now, so on this micro E-mini S&P, could you see that there are dip, and you could see literally every dip there was a bullish engulfing body. Okay, I know some of the bullish engulfing body is not very classic, but exactly if you understand about market psychology, to me the structure is not important, but it is the movement, the story behind the structure, it matters to me the most. Okay, not to stress you further, you could see that each dip they are bullish engulfing body, hammer, bullish engulfing body, and bullish engulfing body. Is so interesting, isn't it? So but today you understand about Catherine. So you could see Catherine basically is sent forth a lot of fear, as these are the period where there are some news. Okay, there's some news about inflationary. So it sent forth a lot of fear in the market, but suddenly the market just push up. Then you know that maybe there's a good probability that I should really take a look to enter on the go long position. Okay. Now another example on the micro E-mini and NASDAQ. I just want to give you a full suite of. Remember, just now I bring you to the 60 minutes, the daily chart, and now the weekly chart for the micro E-mini NASDAQ. On the weekly chart, could you see that there is bullish engulfing body as well? Okay, here there's one, and the kind of dip here, there's one as well. Okay, so it's just very beautiful. Okay, I just want to move on very quickly so that we have time for Q&A. Okay, now I just want to encourage you. This again here is that the latest bullish engulfing body that I've spotted and I shared to the group of the members, where the whole idea is that I want to share with them more example, because in the hope that as we see more example, the more we see, the more we practice, the better we get. So that's the whole idea about this this little interest group that I have. Now, on the 20th of July, still remember, not too long ago, right? Beginning of last Friday and previous Friday and last Monday, because this is a new week, right? Saturday. Monday, the US market started to move down. Why was it so? Because of the Delta variant. Okay, Delta virus that start to hit US. So it sent a shockwave to the market, and the market kind of dipped down last Friday, last Monday, and extend to Tuesday as well. Then suddenly I saw this bullish engulfing body. Later I'll blow up for you, bullish engulfing body. So that's what I say to the case study here, is that the following S&P 180 minutes chart represents the biting point, which is bullish engulfing body. So one of the members spotted it. They say, oh, because usually I'll just give them a very plain vanilla chart, very naked chart. I just want them to spot it. I'm giving you clue right now, spot for it. So I want to train them to learn how to spot for it. So this member spotted, yeah. So I saw that. So it's a bullish engulfing body. So where was it? So I shared on the 20th of July, a bullish engulfing body. Remember that because of the Delta variant, it sent a shockwave to the market, the US market. This is 180 minutes chart. Then where are we today? Up to about 2 a.m. where I prepared the slides. I do a final adjustment on this chart. Slide, it was 4388. I believe that as I was sleeping between 2 to 4 a.m. in the morning, the market went even higher. Okay, so now, so this is where the market is. I'm just trying to inspire you here, is that it can be done. So you can do it. Just keep on practicing. Just keep on practicing. Okay, so Sean, maybe you have a last question for me.
Yeah, Shane.
Sorry. yeah.
Okay.
Yeah, please correct me, okay? That's the whole idea.
Yeah, correct. I think most of
we need to be corrected. Yeah.
Yeah, no worries. I think most of us here who are tuning in right now are Asians. So we may not have traded the US market before, or maybe we have not traded the US indices before, in particular the E-mini or the micro E-mini. So maybe you can share with us, right? How are the Asian market different from the US market? Or how is the US market different from the Asian market?
Okay, how is the US market different from the Asian market? I kind of like to trade the US market quite a bit, but the only problem is that US market is up to about 4 or 5 depending on the summertime or winter timing, right? So, but I have to sleep. So that's the only problem, right? But I can tell that the US market, I like it more. Why? Because I can establish position even in Asia time zone, because all these micro E-mini US indices, in fact, a lot of the CME product under CME group, they are literally 24 hours. 24 hours. So I can establish position if I have a daily view. Just now I saw that sometimes I have a weekly view, daily view, 180 minutes, 60 minutes. And usually if I trade intraday, I'll look at 5 minutes. For those who want to ask me a question, right? So something I like about US market is because how is it different structurally? Is because it is 24 hours. Asia market became a problem because there's always a gap. So if I establish a position and I'm mindful that there's a gap, maybe their trading hours just about 8 hours, but there's an absence of 16 hours. I have to be very careful. If the US market shake, it will produce a gap next day. So I have to be mindful about that and make provision for that gap also. But for US market, I don't have this problem. Yeah, so that's the beauty about US market. I know Sean wanted to ask me the other question about the US traders or the people of the West, the traders, their market psychology.
Yeah,
I
correct.
think you want to ask me this question. Now, can I say this is that whether is it American trader, people of the West, or Asian market, why I say that now we are all the same. We are all human. We have to fight our battles. And some of you may be financially free when you trade. There's no pressure. I think that's the best state of mind. But most of us in the hope that it can be a full-time career, or we trade in the hope that it can be our retirement career or retirement fund. So there's a lot of pressure to trade. So definitely you will be, you know what I'm talking about, and you may be still part of the Catherine. Now, so we all have emotion. So the Americans are no difference as well. They have the emotion. So if you can ask me the psychology, the emotion of the Americans and the Asia, what is it? I can say that they are the same. Why? Because we are all humans. We have to fight our battles. We have our daily stress, daily demands. Maybe you want to trade at 2 a.m. in the morning, your wife will scold you. So these are another factor. So whatever it is, they are human after all. They have their commitment, they have their fear, they have their desire, they have their greed. But why I say that US, the people of the Americans are even more emotionally driven, simple, is this my analogy. I may be wrong. And Americans are the traders, their lifestyle. They are always in debt. And I believe that their debt is higher than those of the Asian traders. So based on that assumption, I believe that Americans are even more stressful. When they're more stressful, it means that they're more emotional. When there's more emotional, again, if not part of the mass market, you are looking from the plain view, you're starting into the emotion of the market, then you have the advantage. So the US traders, they are as emotional, if not more, than the Asian traders. So, yeah. Okay. Yeah. Before we go into the Q&A and open up to the audience, maybe what I can do is that I just want to bless you with this macro view that I have that is applicable, that what I've just spoke about was a bit more on the short term, but hopefully this will give you some preparedness of what may be coming in the future. Okay, now, so this is my Dow Jones monthly chart. You could see all the way to 2008. And if I convert to log chart, so log chart basically we measure by percentage, you could see that there's difference. And even the final print, even the final print, I can see the behavior. Can you see this is a linear chart of US market Dow Jones? If I convert the log chart, you can see that market is much more volatile. Why is it so? Because it measures the percentage move, not the price move. Now, what I'm going to point out to you here is that we still remember about 2008, there was a lot of fear, okay? A lot of fear, and we could see that the market come down. So I would say that Catherine cut heavy losses. Then you still have the subprime, then 2008 was still there. But suddenly the market push up. Then we could see that there form a bullish engulfing body. Okay, now moving forward is this. We know about this, maybe you're already familiar with Black Swan. Black Swan, it means that it's an unexpected turn with no high side. It means this. this event that happens suddenly is send the market tailspin. The event that no one knows suddenly is being revealed is bad, is send the market tailspin. That's called black swan. Now the other gray rhino is this. Not many people are familiar with gray rhino. Gray rhino means that if you're in the field, you better don't meddle with the rhino. Okay, rhino maybe looks cute to you, maybe passive, but once he decided to charge at you, he will charge at you at the full force. So now gray rhino compared to black swan is this. It's also an unexpected turn with hindsight. Hindsight means what? Hindsight, you know that there's a problem already. Okay, you have to expect that the bubble will burst. Okay, you know that there's a problem. Now, what's the problem for US today? Of course, is always talk about that the problem is inflation, which is real, and of course, inflation will lead to higher interest rate. So that's the high side. Unexpected term with high side. So we are living in a gray rhino era today. So I hope that bless you. But how is it related to what my topic here today is this? Now we could see that after the package, the stimulus package by Trump, there was 2.2 trillion US dollars in March 2020, followed by Biden. Biden have the package that was in March this year. It's about 1.9 trillion US dollars. It was called the American Rescue Package. Now, all these, if I'm expecting that how we're able to tell it's not happening yet, but I could see at the moment it was this huge bar of green line. So if I'm just giving you some expectation here, if it start to sink fast enough, so it will kind of complete this bearish engulfing body if it ever happens. So I just want to give you some analytical view that I have all the time. So I like to do all these, but when it happened after that, then we will know that. So okay, with that, I think I just want to open the time to the floor Q&A. Maybe sorry, overrun a little bit.
Okay,
maybe just
no problem.
or 3 questions.
Maybe we'll just stick to 3 questions.
Yeah.
For Kong Hao. So if any question to ask our speaker today, Kong Hao, you may write in the chat box. Coming up, we also have exciting trading game, virtual trading game by Kenanga Futures. So we also prepare amazing prizes for you to win. So make sure you stay tuned until the end of this session. All right. So Kong Hao, you're saying that you trade the US market during the Asian hours, right?
That's right.
Okay. So
would you want me to share my screen? I think I'll still share my screen. Yeah.
You still share your screen, is it? Okay, hang on.
It doesn't matter. Yeah. It's okay. Yeah. Let's keep it this way then.
Okay. Then I'll take down your screen sharing. So if any question to ask Kong Hao, you may write in the comment, or you may write in the YouTube live chat. But I think we'll stick to 3 questions because we have game coming up. All right. So the first question is asked by Muhammad Aino Yakina. What is your opinion for sideways traders?
Okay, sideways trader is no difference. Sideways traders means that the first of all, when the market trades sideways, what is the market psychology when the market trades sideways? When the market trades sideways, it means that the market generally don't have idea of the main trend. So therefore, the market is quiet. So when it trades sideways, likely scalper, you just want to trade in and out. So not much excitement, but it's kind of safe. But you just have to be aware that the breakout. When the market sideways, when the market sideways, what does the market represent? When the market trades sideways, it represents the market have no idea, or there's no juicy news coming ahead. So basically, market is calm. Market is calm. What's the market psychology? Market is calm. So therefore, you want to trade. You identify the support and resistance. You try to trade between the range. It's quite safe. Okay, so you try to collect all the small earnings as much as possible. But where is the risk? I would say when the market sideways is that recognize where is the breakout point. Breakout point when the market break out from sideways market means that the trends start to develop, new start to develop, macro trends that develop, you just have to be very careful whichever way you are in, although it may break up. But if you are short, sell short on the sideways market, then that will be a trouble to you. Okay, so just be aware about the sideways trader. Yeah, sideways trader is good. Not much emotion involved. Generally, market is quiet. Just beware of breakout. Yeah. Good question. Yeah.
Okay. So the next question is by Ahok. Is there a correlationship of treasury bonds price movement to indicate a gray rhino is coming?
Yes, definitely. It's not market psychology related, but it's more macro question related. Okay, let me just give you a flow. You listen very quickly. I'm just going to say it once. Now, between bond prices and interest rate, it move in opposite direction. Okay. Now, so when bond prices come down, means that interest rate goes up. Now, the key is that people are looking at inflation. Why are they so fearful about inflation? Because they do not want the interest rate to rise. Okay, so inflation is real, especially in US. If you look at the CME or the commodity prices from last year March until today, a lot of edible commodity prices, corn, soybean, is go up by 1/4. Okay? Can you imagine the raw materials go up by 1/4? Inflation is already in US. Now, so when is US going to hike interest rate then? And the key is this. Yes, you can monitor bond prices, because when bond prices start to come down, interest rate will go up. So that's a good analogy. Monitor bond prices as well to determine the interest rate. Thank you for your question. And that you kind of you can time the gray rhino when they start to charge.
Okay, right. Watching the bond prices as also the yield, huh?
Look at the yearly chart if you can as well. And because long bonds started to rally in the 80s, 1980s. So if you can look at the yearly chart, it will give you a lot of clue where is bond prices, where has bond prices peaked. So, yeah, so that's homework for you.
Okay, understand. Now just now you were saying that US American traders are actually more emotional, so thus
I
is a
suspect,
bit
yeah.
more more volatile because they are maybe have a lot of debt, or maybe they have a lot of margin debt or household debt. But we have a friend here, Connie, who wanted to ask that why always Asian market more volatile than the US market. Would you have any comment?
Why Asian market always more volatile than compared to US market? I'm not too sure, but in Singapore, we have a different scenario here. The retail investor always say that Singapore market is so boring. They want to move to US market to trade. And I just told them that, hey, when you trade US market, you have to be very careful. It's more for trading. It's not for investment. It's different because US market now is at 35,000. The Dow Jones is at 35,000. If you start your investment here at 35,000, because the pasture always look greener and the other side is hot, is always going up. The last 100 years been going up. And there's a lot of draw by the retailer here in Singapore that want to go over the US to buy and hold for long term. At this point in time, 35,000 a point, which I'm very concerned. But therefore, I strongly advocate that if you want to participate in US market today, you like the volatility, trade them, but not invest for long term. Because when you invest in long term, the risk is there in the event the gray rhinos start to charge. Now, so I'm not too sure about, but I do aware that a lot of my Malaysian friends tell me that their market is volatile. They always ask me the question about manipulation. Maybe you're referring to stock market. I'm not too sure. But I agree that if you find the market is volatile in the stock, the physical, the capital market, stock market, yeah, it's volatile. So therefore, I think your question is more stock related, that is quite volatile. One day move up, one day come down, about 50%. Now, those are small cap stock. Yeah. So if you want to try to participate in those market that is with great liquidity. Liquidity matters, means that why is there liquidity? Because the world investor are participating in it. It brings forth liquidity, and it's very difficult to manipulate. So if I'm going to trade a Singapore stock, there's penny stocks, illiquid stocks, because my broker say that it's a good stock, it's coming, it's a hot stock, but it's illiquid, I will try to avoid, because the odds is against the odds against me. I will try to avoid all this illiquid stock. Go for the stocks or indices, especially what I told you, right? Micro E-mini, I'm not too sure, I didn't survey, but I suspect is one of the most successful contract in the world today. So
Yeah.
it's full of participation. Volatility is there, liquidity is there, and to me, it's a heaven for traders if you like to trade. Okay, so
Yeah. Of course,
and maybe
if
I
you
just
like,
share. Yeah, we'll just take 3 questions. But what you can do is that if you have some question, you can always email to me. I'll be happy to take on, so I know that what's the environment, what's the need, and hopefully in the future event I can address the need and concern that you have. I will just share. Last slide. I just want to bring you to what CME have. I felt that it's really good stuff here. They have.
you want to share your screen, right?
Yes, I'm going to share my screen. Yeah. Could you see the screen
Yes.
right now? Yeah. Okay. So do scan this QR code because this is what CME has. I would say that the last 3 months they launched this specific date I can't remember, but it's basically fresh idea from their trading room. So they're going to give you a weekly or weekly. You're going to receive email. They will tell you what is hot, what is moving. I think if you're new or experienced, or you don't have any much idea to trade, and I think these are a good platform that you can visit. So you can subscribe to it. It's free, and they will send you a weekly mail. So you can just open up and go and read what is hot and what are some trading ideas that they offer. Now, for those that you're keen to learn, so today I share about bullish engulfing body. So this was another event I did with Chicago Mercantile Exchange as well. That was last year or the previous year, but it's classic, right? So whatever I share with you today, it will be classic. So you can impart this skill to your children next time, because human emotion and market psychology will never change. So I believe 100 years later, you still can use what I share with you today. So I shared this about how to identify those hammer with high weighting, how to identify market reversal. It's quite similar topic, but then I talk about hammer. So do the QR code scan, and I think you'll be blessed with this presentation. Okay, I'll flash back this 2 QR code again. Now, for those that want to ask me questions or want to follow my maybe in the next webinar I have. So sometimes my next webinar I'll post my Facebook page, and definitely every day I will post an insight about market, whether it's with market psychology or macro environment, what I see. I'll give you my opinion. Because that's what I'm reading every day. So since I'm reading it every day, I develop an insight to it. I just want to share with my community. So if you can, do like and follow my Facebook page. My address is Kon Hao, my name. These 2 names joined together. So as you like or follow it, when I post something, you will get to read it. Okay, so these are the 2 QR codes that I just mentioned, the CME trading room, and also this free webinar that I did about how to identify hammer with high weighting, market reversal. Okay, so for those you have more questions I'd like to ask me, just feel free to email me, konhao@gmail.com. And for those that you want to receive the slides today, you can email to Kanaga, or you can email to me as well, konhao@gmail.com. Just say that, no need to be so courteous. Just say, give me the slide today. They write 24/7, right? Because I know the Asian, we like to give some small talk, but no need. Just type the date, give me the slide today, 24th July, then I know that is you. Okay, I just forward this slides. Okay, last of all, have a YouTube and Instagram. You can follow Weipedia and you can like it. Okay, with that, thank you so much, Shane. Yeah.
All right. Thank you so much, Kong Hao, for sharing with us trading in market reversal, trading is reversal pattern with market psychology. Okay. Yeah, whatever Kong Hao have shared just now for all the examples, the micro E-mini contracts, they are available on the Kananga Futures platform. Of course, if you want to trade E-mini instead of micro, then of course you can also, Kananga also offer it to you. So thank you so much, Kong Hao.
Thank you
for coming
Thank
to
you,
our show
Sean.
today.
Thank you, Shane.
Shane, yes.
Thank you, Vivian.
So we will
Nicholas.
have a virtual trading game coming up next. So please stay tuned until the end, because we have amazing prizes for you to win. Okay, so without further ado, let me invite our next speaker. Okay, who is Nicholas. So Nicholas is the assistant manager of broking and client relationship management of Kenanga Futures. So who is joining us today to conduct the virtual trading by Kenanga Futures. So for those of you who are here today, all right. So we have already given you the virtual trading sign up link. So if you haven't seen, right? So here is a virtual trading sign up link somewhere in the comment and also in the YouTube uh, chat group. You can go ahead to this, click this link, www.kenangafutures.com.my/KFVT. Okay, so that's how you can sign up an account, and then Nicholas will facilitate this game for the next half an hour, and then the winners in this game will win away some amazing prizes. So without further ado, let me hand over the session to you, Nicholas.
Right. Thanks, Shane, for the introduction. And also, today we're going to play some games. So before that, I'd like to say good morning to everyone. And thanks for spending your precious Saturday morning with us for Kon Hao session. And also, we will play some amazing games today. Right. So let's join us to play a game and stay throughout to win some prizes. Okay. So let me try to share my screen over here.
Okay.
Yeah, Shane, can you see my screen?
Yes, we are seeing your screen.
All right, good. Okay, so I'm just gonna give before I start my session, I'm gonna give a short disclaimer over here to say that before we start, please take note that the futures and options trading involves some substantial risk and due to leverage factor, and may not be suitable for all investors. The content provided in this session are intended solely for informational and also educational purpose. So another thing is trading performance in this virtual trading game does not guarantee of any futures result of any of your actual trading in real market. All right. So I'm gonna move on to the next one. All right. I believe Shane just now has already posted the link in the comment section. If not, you can also scan this QR code or key in the web address over here. All right. So I hope everyone can join us in playing this game. Please get ready your devices. This game is best, you can play it on your laptop, on your PC. Yeah. If not, you can use it on your tablet or even on your mobile. It's good. It's web-based, yeah. It's a web-based. So you can just key in the web address over here or scan the QR code. I will leave these slides open. All right. So if I believe you can able to capture this screen over here. If not, you can just check out the comment section. I will move on to the game site. So how the game site looks like will be like this. After you have scanned the QR code or you have keyed in the address, it will look like this. All right. So this is actually a simulated trading environment that provides a hands-on trading experience on how listed derivative trading works before committed your real capital in the market. So we created this game called Virtual Trading by Kenanga Futures, and you can enjoy and also explore futures trading in this game, right? So the objective of this game is there are a few here. We want to determine determine individuals' trading objective and also to identify the risk tolerance variable for an individual, and also to learn different characteristics of listed derivative. So over here, you can actually click this start button. Then it will bring you to the next page, which is here. I believe some of you may or may not already have an account. So if you do not, please proceed to sign up. If you have, you can just proceed to log in and give a few minutes for those that is newly joining this game, and they can just click sign up button over here. Okay, you just have to click this sign up button over here. If you would like to upload your profile picture, you can upload your profile picture over here. You put in your display name, the name that you want to display as a player in the game. And here, we will need your name as per NRIC. So, is your real NRIC name? It's not your NRIC number, yeah? We do not need your NRIC number. Just your name will do, right? Next thing, mobile number and email address. please make sure all these contact details is accurate so that we are able to contact you if you are the winner for our session today. So select your gender. If you have a referral code from your friend, you can just key in, select your nationality, your state, and of course, set your password. After that, just have to tick this information, agree to the T&C and PDPA, check that you are not a robot, and then just click sign up. After you click sign up, you will receive an email sent to this email address that you have registered here. Just to do a simple verification, you just have to log into your email address and look for the email and just click the verify button. All right, I'll give you a few minutes maybe to try to sign up and try to verify ourselves and log into the platform. So while waiting, I will briefly introduce you what this platform and what you can learn in this trading platform. So in this trading platform, you actually learn how margin works in listed derivative trading with relatively small amount of capital. So the next thing is you will also learn how to long, or sometimes you call it buy, a listed derivative product when you anticipate the market is going up, or when you short or sell when you foresee the market is going down. So the next thing that you will learn is how the profit and losses is calculated for each derivative listed derivative product, because profit and loss is different for each product. It depends on the tick size, the contract size, and also the contracts, the number of contracts that you enter. All right. The next thing you will learn is also how to manage your trading risk in listed derivative trading. Derivative is trading on margin, so managing your risk is very, very important. So in here, you will learn how to manage your trading risk. And last but not least, you will also this game will also help you to identify the market trend using chart pattern and also on candlestick analysis with price action and also some simple technical indicator to enter or to exit the market. So these are some things that you will learn from this virtual trading. So I hope by end of this session, you are able to capture all of these things. All right, for those that sign up, I believe you have already logged in successfully. If you have not, if you have any questions, can you type in the comment section or anything? Just let me know if you have error in signing up or logging in. I believe it will go smoothly. Let me check in the comment section. Shin, is there anyone else having difficulty in signing up or logging in?
So far, I haven't received any such feedback yet.
All right. Okay. So far, then I think shall be good. All right. Let's move on. After you have logged in, you have signed into this virtual trading, you should see a page like this, right? Where you can see on the left side, there's a lot of tabs over here. Then you can see there is public game and also private games, and here's your profile. I will go through briefly on each of all these functions, and you can explore in details after the session. You can still play this game whenever, wherever you want. All right. So first of all, game dashboard. Game dashboard over here, you can see public game, which all the games is listed over here. You can play any of the games here. Later, I will go through with you. All right. Then private game is where we're gonna conduct our session today. It's gonna be under here, Facebook Live, 24th July. I will go through and let you know how to join this game later. All right. Please go through with me along with all these things. So in this public game, beside on the game dashboard, the second one is the leaderboard. Here you will see on a weekly basis, monthly, yearly, and all-time basis that what's your ranking, and you can compete with your friends, your pals, and your family that who will be the top trader, right? For each of the listed derivative products here. The next thing is going to be contract specs. And in futures trading, before you start trading any futures product, you will need to understand the contract specification first. So for example, you can just click any exchanges. Let's say we go for CBOT, Chicago Board of Trades. So let's say you select a product like micro E-mini, right? Right. So you can see all the things is listed over here. The next thing is going to go for invite friends. invite friends. You can send email to your friends, up to 10 emails, and also, or you can just share it via the WhatsApp, Facebook, or LinkedIn with a referral code. Right? Next thing, game walkthrough. You can go through with here and how to start the game, but no worries. Today we will not go through this. I will go through with you later on real games. You can read some rules of the games here, and of course, if you
Because
were
there's one
interested,
question to ask: any referral
Yeah.
code to fill?
oh, okay, referral code. If you do not have any referral code from your friend, it's good. It's good. You can just skip that column, because let's say for me, I have my referral code over here. So if let's say I would like to refer to my friends, I can just copy a referral code and send to my friend. So if you do not have any referral code, it's good. You can just skip it and just proceed to sign up. It's an optional column over there. Yep. Any more questions?
So far, no.
Okay. So let's proceed with this. Okay. So rules of game. If you want to read all the rules, you can go to here and read. I will also briefly run through with you on the rules later on. And of course, if you have anything that you would like to want us to contact you, you can write in your subject and also your message and which one would you like us to contact you, whether by email or by phone number, right? After that, you can just hit send and we will receive your message. And if not, if you want to contact us directly, you can also call us or email us, right? And of course, before you sign out later on, please rate us, how many stars you would like to rate, and also leave your feedback over here before you click sign out. And if you would like to open an account, you can always click this open an account button. It will link you to Kenanga Futures website, and the whole account opening process is free and is online. No signature is required, no printing is required. All right, this is very
awesome.
one step. Yeah, now because of MCO, right? We do not need to print out all the forms and meet face to face anymore. So everything we go digital, and we can open an account wherever you are in Malaysia or even you are outside Malaysia, you can still open an account with us.
Wow.
Yeah. So we cut off all the paperwork and also the tedious way. So yeah, a lot of people having good experience in using this. And also, if you like to know more about our education materials, like some fact sheets, like some reports, occasionally Kenanga Futures will send out some reports, and also on a daily basis, we will send out commentaries as well. You can go look through in our education materials. Besides that, we have one-on-one coaching session. You can book this session with us. We will arrange usually about 1 hour, our in-house futures broker to talk to you. You can ask any questions related to futures, how to trade, how to place a position, where to cut loss, where to take profit. Anything you want to ask, you can ask. And of course, event calendar will show you all the events that we have throughout the month, throughout the following up to the next month. You can click anywhere that you are interested. You can just register our events over here. All right. So without all these things, let's proceed to the game. So you can go back to here, click game dashboard. I will show you how we can start playing this game and how this game really works. All right, this is a game environment. Yeah, it's a simulated trading environment. It's different from your live trading. So from here, let's say I will choose today micro E-mini Dow Jones index futures. So today, let's try to trade these products. So from here, if you move your cursor to this eye, you can see that the exchange is CBOT. It's listed on CBOT. The product is micro E-mini Dow Jones industry average index futures, and the initial cash balance is 10,000 US dollar, meaning that I'm giving you virtual US dollar of 10,000, and then the initial margin and also the maintenance margin is at 990 US dollar for one contract, right? Then the game duration here is 60 days, and the trading day is going to be 10 seconds. No worries, you will not play this game for 60 days. This one game will only last you for 10 minutes. 10 minutes only. In this game trading environment, 1 day is equivalent to 10 seconds. Meaning that now it's day 1. After 10 seconds, you move to day 2. So in order for us to complete the 60 trading days, it will just last you like 10 minutes only. Right? So we can just click this start to join game. Right, over here, if you want to refer back what's the thing that I mentioned just now, you can always go back to this I and know that the initial margin that you have and also what's the initial cash balance that I give you. So you can see over here. So I'll introduce you. You can see there is an open, high, low, close, and also volume index here. There's a chart here. There's a candlestick price chart here with open, high, low, close. And then also this is the volume chart. And then we have basic technical indicator like RSI and also MACD. This chart you can zoom in if you like to, or you can zoom out if you want to see a more zoom out chart. All right, you can adjust the parameter here, adjust over here, the axis. And of course, below here is the order journal where it will record all the order that you key in. And if you notice, there's a timer here counting down from 10 seconds to 0. So every time from 10 seconds move to 0, if you move to the next day. From day 7, you move to day 8. So the total trading days they're going to play in here, I repeat again, is 60 trading days only. So the price is going to be 1,000 for now is 18,986. So there, if you notice, there will be only one price. If you trade it in real market, usually they will have a bid price and also ask price. In this simulated trading environment, to make it simple and easier for you to understand how futures trading really works, we eliminate that and we just give you one trading price for one day only. So meaning that whenever you want to buy or sell, you will only buy or sell in this price, right? Let's say now I think the market is going to break up. We're going to go up. Let's say I trade like 2 contracts. I just hit 2 over here. I hit buy. I have bought 2 position. On day 12, I bought 2 quantity at this price. My net position is at $2 10,000, and I make a $71 profit over here. So net equity basically is your initial cash balance add up or minus up your losses, then you will get your net equity. And margin, if you see, is 1980. Because of your margin level is at 990. If you buy 2 contracts, then you just have to times 2, and this is your margin required. After minus off your margin, he will give you my excess, margin excess or margin call. All right, over here in this game, maybe during the whole game you might encounter some of the situation where they will tell you that you have insufficient funds or you will have margin call. All right, I'll show you more. Margin call is for now quite difficult for you to simulate it out for you, but you may have later on if you have fully leveraged all your position or you have a huge loss over later. Let's say I try to key like 10 contracts. If I try to hit buy, it will show me insufficient funds because the margin that I have, the net equity that I have, is not enough for me to trade additional 10 contracts. In over here, you not just can buy a futures contract. In the other way, you can actually short a futures contract. Let's say I would like to turn short. Let's say I can short 6 contracts over here. If I hit sell, it will show -4. -4 means that you are in net short position. So net short position means that if you anticipated the market to go down, you will short, and if the market really down, and you will make profit from these trades. So it's just that simple. So I hope you enjoy the whole game and also make a nice decent profit at the day 60. Right? This is just a simulated and also a sample for you. I will just go back to here. I click this game. All of the public game you can play as many times as you want. Today, we're going to play a private game that I have set a private environment just for today's session only. All right, so please click this private game, 24th July, search for this and click join. All right, the game password is DJIA. I key it for you, DJIA. Capital letter, yeah? I show you the password over here.
DJIA stands for
Yes,
Downturn
DJIA.
Industrial Average.
Yes, correct. Right, today, this game session, we are giving out the top 5 winners a Netflix gift card worth of 50 ringgit. All right, please join and try to win some prizes over here. Let me see. Is anyone already join this game? All right, cool. I see a lot of people start joining in.
Okay.
That's good.
There's a question that asks, already registered but can't sign in. Is there any?
Oh, you have to go to the email address that you sign up to verify first. You have to click the verify button in your email address. You should receive an email. You should receive an email. If you do not receive an email, meaning that you registered the wrong email address. If it's the right email, you should receive an email from Kenanga Futures Virtual Trading. It's from KFVT. So that email, there's a red button there. You just have to click verify. Then it will bring you to the login page. Then you can proceed to log in. Is there any more questions or any issue faced by the participants?
So far, no more. There's one question asked, can I play this game anytime?
Okay. For public games, you can play anytime, whatever time or wherever you want. For public games, you can play as many times as you want. And the game's data will change every game. Meaning that if you go back here, if I try to show you, for public game, all these public game you can play as many times as you want. Every time you join a game, it will start with different trading data. Let's say if you click this game, I join back again, they give you a different trading pattern. So you can keep on practicing your trading skill according to different market scenario. You can play as many times as you want, and it's free. We are not charging anything. No worries, no advertisement, anything.
Oh, nice. Nice to hear that. So this is a risk-free way for you to experience the futures market. Not only in the Bursa Malaysia derivative, but also in the Chicago Mercantile Exchange.
Yeah. We have like Bursa products over here, and most of the products you can see is US product. And of course, if you like to see Hong Kong product, you can also, there are 2 Hong Kong's product over here, the Hang Seng Index. But you can see, if you say recently, like what Kon Hao have mentioned just now, a lot of all these commodities is like going like a fold, right? The prices. If you like, you can also explore some of the products over here, like soybean oil. Or you like precious metal, you can go for like gold, silver, copper. And sometimes you heard that, wow, mini crude oil can go like below zero. And you can explore it also, because you do not need to like put in your real capital market before you start playing with it or start explore it. You can try to join and feel the volatility in the market. Yeah. So some people will say, oh, inflation is going up. Can I start to trade gold? Yes, of course. You can keep on playing with it, with different products over here. Any more questions asked by the participants?
So far, no.
Okay, I see.
Yeah, so this is really a very exciting game for us to experience leverage, margin, how to calculate profit and loss.
Yeah. Okay. If anyone would like to know, the password is DJIA, stands for Dow Jones Industrial Average. For this game, it's under private games section. All right.
Okay, so if you just newly joined, you can create an account and then go to private game, pick 24th of July, key in the password DJIA, and then you're good to go to join our game today.
All right, let's see. All right, I can still see people joining because I will start this game simultaneously. Yeah. So when I click start, everyone will start at the same time. And then there's a more fair to everyone. Okay, you see people still coming in. Right, I give you some more some time. Try to search for this game. We are giving out Netflix gift card worth of 50 ringgit to the top 5 winners for this session. All right. Okay, I think we should start. Okay, let's go back to the game over here. So I have explained to you how the whole games work and what are all the functions over here. The chart, you can always zoom in, you can drag and whenever you want, right? And then of course, order journal will record all your orders. Later, when I click the start button, the timer here will start counting down from 10 seconds to 0 and we'll move to day 2. So you can make your decision. Either you would like to buy or you would like to sell, or just like to do nothing. Okay? Not necessarily you need to force to do the decision every day. Yeah, you not need to make the decision every day. So if you think the market is going sideways, you do not have any clue what's the market, what's the direction of the market going. You can do nothing until you see a signal. All right. So I will start the games now. Okay, be ready? I'll start in counting down in 5 seconds. 5, 4, 3, 2, 1. Good. All right, so you can see the timer is start counting down. You can key in the quantity you want on the day. Okay, day is on day 2. The price has changed. So, all right, Shane, I think we will just leave it for them to enjoy the whole game. Let them focus on the trading. And this whole game will just last 10 seconds. We'll be coming back in 10 seconds, right? No, sorry, in 10 minutes. Sorry.
10 minutes, is it?
10 minutes, correct. All right. So let's see. All right. Day 60. We have reached day 60, and the game has ended. I hope everyone enjoyed the game. I see there is a lot of people making good profit from this game. That's a good thing. I believe from what maybe Con House session just now, you learn to identify where the market starts to turn and get in at a good price. All right. All right. Okay. So at day 60, let me try to show you what's the ranking over here for our today's session. I will just show you the top 15, top 10 ranking over here. Okay. All right. Congrats to the top 5 winners that will be giving out the Netflix gift card worth of 50 ringgit. The top 5 winners are Crow, MH, Oxang, Won, and also Adamantium. All right, the top 5 winners over here. We are giving out the congrats to the top 5 winners. To redeem your Netflix gift card worth of 50 ringgit, kindly ensure that your contact details in the profile are accurate, and also do expect a verification call from Kenanga Futures within maybe next week. It's as part of our verification process. So you have to click over here, your profile, and ensure that your mobile number and also your email address is accurate, so we are able to call you. So failure to do so will result in the prize being forfeited and hand over to the next qualified winner. So however, please take note that we will not ask for any private information such as your IC or banking details. As we know that recently a lot of scams out there, right? If you call you for the price verification purpose, we will not ask for any sensitive info like your IC and banking details. Yeah, please take note. So thank you everyone, and I hope you enjoyed the whole game. You can always click the game dashboard over here and play all this game as many times as you want. If you're interested to join our events or open accounts, you can always click all the buttons over here. All right, thanks everyone. And I'll pass back the session to Shane. Shane, over to you.
Yeah, thank you very much, Nicholas. I think this game is really impressive. When I look at you navigate over the platform, I was like, wow, this is such a very powerful platform for retail investors to learn about futures trading. Because I think many of us here are familiar with stock trading, but on futures trading, maybe many of us here are this is quite new. So if you're quite new to futures trading, you should definitely check out this virtual trading by Kenanga Futures. Go to navigate around and learn, play a few games, so you learn how margin works, how leverage works, how to calculate the P&L, with different price movement with different product. Every product is different. Okay, we have I think Kenanga Futures offer you local products as well as foreign products such as US markets, CME, and also Hong Kong futures market as well. So you can check it out. Okay, thank you so much. I think we have come to the last part of this Facebook and YouTube live. So for those of you who are keen to open a futures trading account with Kenanga Futures, the account opening is free, right?
Yeah, the account opening is free. Everything is digital.
Free. So I've given you the Kenanga Futures account opening form. So in both YouTube live chat, you just search for YouTube live chat and also search for the our Facebook live chat comments, so you can find all the Kenanga Futures account opening form. So just fill in the information. Account opening are now digital. Okay, you don't have to sign anything. Just fill in online form. Then you will Kenanga Futures broker representative will attend to your account opening request lah. All right. So if you open an account recently, of course, you can also participate in one of the upcoming exciting campaign, all right, which is called accelerate into the futures. Okay, now I can only tell you the name because more details about the accelerated into the futures campaign by Kenanga Futures will be revealed to you next week. So they will launch the campaign. So just stay tuned for this as there are amazing prizes worth a lot of money to be given out for our new account sign up. Right? So yeah, stay tuned. You can sign up your account today, and then you will stand a chance to join the accelerated into the futures campaign. All right. So last but not least, of course, we have come to the end of this session. I will want to give you a feedback form. So if you feel that this session is okay, all right. So give us your feedback, how we can improve ourselves. If you feel that this is okay, then of course give us a good review. Of course, if you feel that there are area of improvement, please fill up the form and let us know how we can do this better, do this live streaming better. Okay. Now I don't really do live streaming that much, so this is only once the rare occasion that we do a live streaming, because most of the time we do webinars, right? But nonetheless, we have another Kenanga Futures Live coming up next month. So we'll let you know more about it and what topic we will talk about next time. Okay. Also, there's a question, Nicholas. I don't know if you would mind to answer. What is the trading fee for Kenanga Futures? I'll ask.
Trading fees for Kenanga Futures, we give out with different products. So better if you can contact us directly. So we let you know different products will have different trading fees.
All right. So thank you, everybody. So two things. Number one is to, if you don't have an account and interested to open a futures trading account, you can open one with Kenanga Futures with the link that I've given you in the comment, also in the YouTube live chat. And for those of you who stay tuned until the end, we will appreciate it if you can give us a feedback. Okay, we have just put a feedback form in our comment and also in the YouTube live chat. With that, thank you everybody for joining today's session, Trading in a Reversal Pattern with Market Psychology. We have got Kong Hao to talk about the US market, US indices, to talk about the market psychology, how to spot the reversal pattern using bullish engulfing pattern. We also talk about what are the differences between the Asian market and also the US market. And last but not least, we end with Nicholas giving us a tour on the virtual trading by Kenanga Futures, and we'll be giving out 5 Netflix card worth 50 ringgit to our 5 winners today. All right. So thank you everybody for staying until the end of this session. I hope that you have a great rest of the weekend. Bye, everybody. See you next time.
Bye-bye. Thank you.